Yes, thank you,
Okay,
Marla.
we're off and running. Thank you, Shandis.
So here we are at week 3. Thank you guys so much for just joining us and learning about our loan process and all of that. Thank you to EWOC again. And I do see one person who I think has been here every week. So thank you so much for joining us live in person every week, not in person, virtual, live virtual. So today is the last day of our 3-part webinar, and I say that probably this is the most covered. We get the most questions over this topic, and it's about our application. So a lot of times people get to the application part, they learned about capital, and they learn about just all of our services. And when you get to the application part, this is when the questions really start happening. So I'm really excited to be able to have this resource recorded so that we can go over. Erin is going to go over all the things that apply to our application, and we'll go through each one of them. So so I know some of you have definitely heard our mission before, but just for those of you who might be tuning in for the first time, I'm just going to quickly go through who we are. And for those of you who've heard it twice already, thanks for bearing with us. But we're Feed the Hunger Fund, and we are a small nonprofit organization, and we are what is considered a CDFI, which is a community development financial institution. So we are comprised of 2 teams. One team is in Hawaii. Obviously, that's Erin and myself, and Eric, who's on the bottom right hand corner. That is our Hawaii team, and we have our California team as well, which is comprised of 2 loan officers. And all the other faces you see on this screen are our board members who are both from Hawaii and California. And right smack dab in the middle, you'll see Patty Ching, who is our CEO. Yep, Aaron's got his little arrow there. Patty, the reason our teams are based in Hawaii and California is because Patty was born and raised here in Hawaii. She grew up in Manoa, and she moved to California. So both Hawaii and California are very dear to her heart. And we do, even though we are 2 separate teams, we do work a lot together. And so, but obviously here in Hawaii, Erin and myself and Eric are the people who will be working directly with our potential borrowers and our current borrowers. So our mission of Feed the Hunger Fund is to work hand in hand with funders and borrowers to build a world where access to opportunity and capital create a greater food equity, security, and sustainability. So as you might gather from our name, we are a CDFI that focuses specifically on the food and agricultural sectors. However, we do not necessarily limit who we lend to based on that, but that is our primary focus. So if you're in the food business, if you're in farming business, or if you're somehow related to food and agriculture, we would love to speak with you. But again, we do have a portion of our monies that can be given to businesses outside of that. But that's essentially who we are. And I believe that's it for Feed the Hunger Fund. And I will hand it over to Erin now, just to get into the nitty-gritty of the application process.
Thank you. This is a simplistic outline, but this is really the process from the borrower's perspective. 4 steps: get the loan application, fill it out, submit the requested documents, and then answer any clarifying questions. That's it. So what does the loan application look like? Well, here's the required documents. So these would be the required documents. Number 1 is a signed loan application. We legally cannot give you debt if you don't sign off saying you want debt. So if we don't receive that signed loan application, that we can't go any further. Also, that's where all the information is. So that's number 1. Then the next step there is sort of the credit report with the credit score. There's sort of the 3 agencies there that provide them. I'll go into detail on some of these. I think this will probably be a short presentation, but I'll go through and answer questions. The monthly budget or the household budget, the personal budget, tax documents, the last 3 years. So we're kind of in that period right now where the April deadline for 2021 has passed, but the October extension hasn't. So we kind of like, if you haven't filed yet, we get it, but after October, we're like, okay, we want your 2021 taxes. So we have this sort of gray period. It's always so much easier to have the taxes than not. Now, if you haven't filed yet, you filed for an extension. What we would look for is your sort of year-to-date financials, and then any sort of W-2s or things like that that you would be using to file your taxes. So those sort of supplant the tax information during this haven't filed my most recent year. Bank statements for the last 3 months, business and personal. This helps us provide some verification of expenses and understanding of cash flow. Business plan, I'll go into that. We don't really want a super fancy one, although if you have one, great. I'll break down what we need there. The resume, it could be yourself if you're the project principal, or if you have a staff that is really the expertise or the team, the resume of those key folks. Again, more important if it's a startup or a change of business. If you've been doing the same thing for a long time already, your tax documents and the fact that you've been in business for that long are usually sufficient. A letter of declination from another lender. So that's an important one. Our funds, our federal funds require this. We are sort of a lender of last resort and require you to have applied elsewhere and been declined. That can look like an email. It can look like a letter. It could, sometimes you'll get declined for what you asked for, but approved for something different. That can still work as a declination. I'll probably just reiterate those exact same points later. And if a proof of equity contribution, for some funds that use USDA funds, there's a requirement that you have a 25% contribution of your own into the project. That can come from your own funds. If you've invested money into this specific piece, just show the receipts for that. Or if you've got cash coming in from elsewhere that isn't federal, you can show proof of that. It isn't necessarily a requirement all the time, but it is one of the matrix. In the last talk, there's that equity contribution that helps improve your score. If it's a 0, that you're going to get a 5 on that score, but if you've done something greater than that, it'll help improve the risk rating. So that is that. So this is going to be super boring. I'll walk through the loan application here sort of with the key sections and just kind of touch on the main information. I apologize, the font isn't super clear, but it's really, what is the business name, including doing business as, that's the acronym for DBA, federal ID, whether it's FEIN or social security number, depending on your structure. What type of business structure is it? LLC, corporation, LLP. The business address, business mailing address, the date the business was established. So we, how long we've been in business, and then the last 3 years of gross sales is what's, so you would have 2021, 2020, and 2019, and what were your gross sales there? This is an important one. This helps us really with our federal reporting requirements. Some of the things we get measured on is job creation. And so here it's, what is your current number of employees, whether they're full-time, part-time, or seasonal, and how many do you plan to have after you receive this funding? And it doesn't have to be right away. Obviously, it takes time to get things done. I wouldn't expect that you receive funding and then the next day you hire people. It takes a while to find the right person, and it takes you a while to get to where you need to be to hire that person. So it's a keyword there being planned. What do you think it will be? This is a space here to put in a brief description. If you've got a website, probably you could cut and paste from your about us, or really just a couple short sentences, bullet points about what is the business, what is the core function, who are your customers. Whoops, sorry. This part here is the loan request. make sure that this amount here matches this amount here. So let's say you're asking for $100,000 and you want a 5-year term. Unless I suspect most people are going to select a 5-year term. There is sort of an off menu selection of up to 7 years that we don't typically offer on our loan application. Just, you know, it's for a larger loan, it makes sense to have the payments over 7 years, right? Because they'll be smaller. It'll cost you more in interest, but if you can afford it in 5, great. But you know, this doesn't mean your term is set at this. It's just what you're probably expecting. So, so the amount requested. What is your proposed use? Are you going to buy a refrigerated truck? Are you going to pay for salaries? Are you going to buy some other sorts of equipment? And it doesn't have to be to the penny. It can be round cost estimates, you know, and then the total for that will here and here should add up. So that's sort of on the first page. The second page here is sort of related to the business. And I would hope not everybody does, but if you've got some sort of QuickBooks or accounting set up, you could just run that report. If you don't have something like that, and maybe it's like a sole proprietorship, it would just be, you know, what is the cash on hand for the business? What invoices do you have outstanding that folks haven't paid on yet? What is your inventory value? What is your equipment value? What do you owe people in terms of, you know, accounts payable? Is there debt or other liabilities? And then total them up, and the difference between the two is sort of the business net worth. If you've got quick, oh, is there a question?
Sorry, really quick. Could you go over number 7 and 8 in a little bit more detail? Because I get that question a lot from people.
Accounts payable. So let's say you purchase some inventory, but you haven't paid for it yet. That would be an account payable. Or you have a monthly utility bill that shows up. That's an accounts payable. What else would be an accounts payable? So you put a down payment on a piece of equipment and there's a balance remaining on it. That would be an accounts payable.
Yeah, and number 8, the notes.
A notes payable, yeah, that's the difference between 8 and 9 is really just time. So a long-term liability is something that's owed beyond a year. A note payable might be something that's due within that year, or it's maybe a partnership debt. You know, somebody's loan, you know, friends and family has loaned something to the company, and there's an obligation there due within 12-month period. You might put that there. Yeah, is that good? Okay, business assets. So this is where you would, you know, list the items that you have that are sort of in your net plant and equipment and your inventory, perhaps. Things, you know, tangible assets for the most part that you've bought and have a value. So what are they? What is their current value? Do you owe any money on it? So let's say you bought a company car. It was $100,000 car. It's a nice company car. Maybe it's a big truck or something. Anyway, and you have a $50,000 loan on it. You would put that, you know, $50,000 here. Who owns that debt, right? Is the car loan company. And then, are you willing to pledge that as collateral on this application? Meaning that we can use it as collateral. That's super helpful. And then here would be a list of all those business liabilities that would be, you've got a business loan or any debt associated with the business. So let's say, again, it might be that car, right? The balance of that car loan. There would be the $50,000 you borrowed for that car. What was the original amount? $50,000. Say you paid off half of it, so there's $25,000 left, and your monthly payment is $125. And that car is being used as collateral for it. That way we would know that, okay, that car we can use it as collateral, but we would be in second position. So that this outstanding balance would have to get paid off before there's any extra value that we, Feed the Hunger, as a lender could use it as collateral. So that's sort of the balance sheet breakdown. I don't know if there's any questions on that before I keep going. This is sort of the same thing, but now instead of the business, this is the personal information. And it's duplicative for every additional owner or guarantor. But it's, what is the name? Here's an important one. What is the percent ownership? So we typically don't, we require this information for every person that has a 20% or greater ownership stake in the business. Doesn't mean you can't include somebody that has less, if you wanted to use their sort of income as well to help underwrite the loan. If we talk about a guarantor. So contact information. Again, here's sort of the demographic data that helps us with our federal reporting, and knowing that we're hitting our target markets and whatnot. So that's helpful there. Gender, marital status, number in household, ethnicity, level of education. And then again, this is another balance sheet similar to the business, but now it's this personal. So what is your cash on hand? Do you have a retirement, Roth IRA? Are there personal debts? Do you have a life insurance with a cash value? Do you have stocks, real estate that you own, automobiles, other stuff? What is that worth? And then again, the offsetting on the liability side, what money do you owe? Is there a mortgage? Is there a car payment? Do you have other sort of unsecured personal loans, mortgage, unpaid taxes? Hopefully that's not the case. Other liabilities that aren't included there. And then again, total the assets minus the total of the liabilities, and we arrive at a net worth. So this all goes into our risk rating matrix and helps us underwrite the loan. Here you can include personal assets, and again, that helps. Probably a bit of a worksheet for you to calculate maybe some of your personal net worth if you're looking to add in other assets or personal property here. But also if you would be willing to pledge it as collateral down here. So it doesn't just have to be personal assets to get to the collateral coverage. If you're willing to put up, say you've got a car, personal car, or again, we've had people pledge, fancy racing bikes and Rolex watches and other things. Again, we hope to never, ever, absolutely ever be in a situation where we would have to take those and sell them. But it certainly does provide assurances to the loan committee that, wow, this person is willing to put these things at risk. So we would need to know if there's a debt on the car, the personal car. When did you buy it? What was the original amount of that loan? What is the current balance? What is the monthly payment? And is it being used as collateral or not? Trying to think if I have additional comments. And no, I think that's it. It's pretty similar.
Aaron?
Yes.
I noticed some of the line items have asterisks and some don't. Does that mean anything?
Yeah, there was some notes I cut off. They weren't super informative. We probably need to revise our loan document to some extent. But yeah, I think it was this reference to where you might find this information or that sort of thing. Trying to reduce my size for this overly burdened slide. Thank you.
Thank you.
And then this is on the last page. Again, there's some other legalese, but this is just quick general questions that we kind of look at for quick red flags. Some of them being, if this collateral is pledged elsewhere, that's fine. We just need to know so that when we're doing our collateral coverage that we can exclude those amounts. Taxes, again, you don't have to be current with your taxes, although obviously we would like that, but you do need to have at least some repayment plan in place. You know, you might have past due taxes, but you've got an agreement with the IRS. If you currently retain ownership or control of another business, it's important for us to know that as well, because there might be associated debt that you're responsible for that we would need to calculate into our sort of our debt service coverage ratio, particularly if we're looking at additional household income. So the idea being, let's say this business is super profitable and you're going to borrow money on it, but you're really using that money to service debt or it costs at another business, right? We would kind of want to be aware of the whole big picture. So that's something to be aware of. Are you named as a party to any legal claim or lawsuit? You know, that's something that's obviously could be problematic if there's a potential for a large claim against you. Again, we've done loans to folks that are in legal proceedings. It's not a no, we can't do it. It's just understanding that risk and what's, you know, what's at stake there. Again, it might depend on what the legal issue is. Certain things are not, you know, I think if, what is it, we call it the deadbeat dad thing, you know, I think if there's an individual not making child support payments, I think other crimes preclude us from lending to folks, but that's never happened. So, but I mean, we do a quick background check anyway, but that's, you know, that's what we're sort of looking for there. Ever declared bankruptcy? Again, there's very valid reasons, the unfortunate reasons that somebody may have declared bankruptcy. It's good to know. Primarily, it's how recent was it and what was the cause for it. So those are things that we would be looking into. These are all sort of like the big extenuating circumstances that might complicate the underwriting process and add a little more time as we try to seek clarification on understanding the why and how would it impact future repayment. Same with the defaulted on a loan. You know, again, it's not a deal breaker. It's just things that we want to be aware of and figure out and understand why. Business manager, this is a good one if you say yes to this one. Right, we're glad people have done that, and that provides some comfort. And I put this last one here because it's happened not that often, but a couple times where I get an application and it's not signed, and I you know, hey, can you sign it and send it back in? I can't really move forward until you do that. So that's the application itself. There are a lot of supporting documents that go into that, as mentioned earlier. And so one of the first ones is the credit report. We can pull credit for you, but it does cost money, and that'll be passed on to you, and it can impact, well, it will, you know, if you have a hard credit, it'll be a hard pull, and that often will have a negative impact on your credit. So it's easier for us, and doesn't cost you anything except your time, to just go pull a free credit report, and then there's no impact to your credit. It's TransUnion, Equifax, and Experian are the three ones that you can go to. I've got the phone numbers there. I don't know, the website is the best place to go. I don't know, I've had one applicant fax me everything. That was fun. But I think using the website is the best way to go. You can pull it down right there. It'll have, you know, all of your credit report, and make sure it has the credit score. That's something that we do need to have so I can plug in and fill everything out. Sometimes they don't have a credit score. If that's the case, if you have a credit card and the internet, you can usually most of your credit cards now will give you a credit score as well. And so just taking a screenshot of that is sufficient. So that's probably, or I hope, one of the easier things to get in terms of supporting documents. I don't know if there's any questions on that. Okay. So the personal monthly budget, I don't know if this, it's a little small, but it's This is where we look to see revenue outside of the business and the expenses in the household. So at the top there, right, the income sources would be any revenue from the business that you're requesting the loan for. Let's say you're paying yourself a salary, or if we're just pulling over the net income, if it's like a sole proprietorship. But do you have other income that's your own from elsewhere, or do you have other household income? We can include that here, and it will help with the underwriting in terms of calculating the debt service coverage ratio. But to go along with that, we need to understand the household expenses. And this does not have to be to the penny. Just roughly, if you've got rent, what is your monthly rent? That should be straightforward. You're cutting that check or whatever every month. If it's a mortgage, you know what your mortgage payment is. What is your balance? Food, again, ballpark it is fine. Roughly what is it a week, and then multiply it by 4 or however you want to do it. Same with phone, internet, utilities, other, if it's something else, gas, insurance, anything there. Entertainment, if you're a business owner, you probably just work, you don't do any entertainment. Anything else that might not be listed that's significant. But really don't knock yourself out. There are industry guidelines, like an average household, that we just kind of compare everything to sometimes, but really just ballpark it. And that's helpful. And then your
I
credit
do wanna
report here. Oh, is that a question?
No, I just wanted to mention that this is a template that we usually email to you or give to you along with the application. So it's an editable template, but Aaron, do we accept, I just want to clarify too, like pretty much everybody that has applied have given us this template, but if they have their own monthly budget, is that acceptable as well?
Yeah. Any form of this information is fine. I do send out, I think there's a PDF and an Excel version. The PDF, if you wanted to print it and handwrite it or whatever, or if you're into Excel like me, you can fill it out in Excel and send it back. That works as well, whatever's easier. And then so thank you, Shandis. And the last part of this is really from the credit report. So most people have a rough idea of how many credit cards and debts and what those payments are. They can just fill them out here. If you don't know what your balance is, just a rough guess. But I always go to the credit report and double check and verify that what's here is totality and accurately reported. Often there might be a disconnect between when you pulled your credit and when you reported your balance. I'll just go with whatever's most current. Well, I usually go with the credit report, but often that might be pulled after you fill this out. That's pretty straightforward. I don't know if there's any more questions around that. Again, to Shandis's point, if you already have something, happy to use that as well. And again, this is where the bank statements come in, because if I have the 3 bank statements, I can kind of quickly look at that and average over the last 3 months and see what's going in and coming out to compare it with the household budget. But that's not always the case, that there's just one bank account for the household, right? There might be a joint and then 2 separate, or however that works. But so this is super helpful information and actually pretty important. So I don't want to gloss over that. And then this is probably the one most people think about, is the business plan. What we're looking for is really just these 3 components, sort of the pro formas, which can be daunting for a lot of people. If you're not familiar, it's your income statement, your cash flow, and your balance sheet. If all you have is an income statement, that's fine. We can work with that. But the 3 pro formas are really what we're looking for. And sort of the size of the loan, it travels along with the complexity of what we would like to see, right? So if you're looking for like a $250,000 loan, we would really like to see that you've got a solid pro forma and that what you've got that in place. There are resources to help you build these out. I believe that we have some online templates through our Initiate platform. There's also folks at the Small Business Development Center that can help out there. And we can send you links to those things that, you know, if you wanted to email Shandis or myself, and we could get that figured out. But you really, you know, as a business owner, your cash flow is super critical to understanding when you're going to need debt. What are the impacts of some of your investment decisions, right? So a growing company, you might be profitable, but if you're trying to double your sales, you've got to double your inventory purchases, and all of a sudden you're in this big cash crunch because you've doubled expenses, but you're still waiting for that revenue to come in, right, on your accounts receivable side. So you need to be able to manage that and understand that, and your cash flow statement really does that for you. Again, if you're in QuickBooks or have some accounting system, I would, you know, that's all you have to do is, you know, print report and you're done. So that's strongly encouraged. What it doesn't do is really projections, although I think QuickBooks Online does that. But to do your projections, which are helpful, and those are sort of going to the next two pieces of that we look for. So before I move on, I'll just summarize. Out of your pro forma statement, at a minimum, I would like to see an income statement, you know, specifically for the historical, and then maybe some forward looking up to, you know, 3 to 5 years as to what you think, you know, you're going to be doing. But then how you get to those projections is sort of based on your marketing plan and your margin analysis. So the marketing plan is going to tell me, you know, where are you going to sell these products, and how much of these products are you going to sell? That's sort of the baseline key information that we would be looking for. Again, products are a little different than a service. If you're providing a service, you know, who are you providing that service to? What industry is it? How many businesses are in that industry that need that service? You know, or is it an hourly thing? We're going to provide this many hours of service, or we need this many contracts, and a contract has an average value of. Those are sort of the things that you would need to be thinking about. And that's sort of the last part, is the margin analysis. And this is pretty critical. I've seen it a couple of times where somebody finally does it and realizes that the product they're selling isn't making them very much money. In the worst case, it's losing you money. And you really need to know that. And that's, you need to stop that service or product, or you need to raise prices or figure out ways to reduce costs. And having that margin analysis is so fundamental. And it might seem daunting, but I promise you that you probably already have that information in the back of your head. You just need to write it down. So you know what you charge people. That's the first step. Okay, how much does this thing cost? You know, what do I charge people? So that's your first number. And then your second number is, what does it cost me to make that? And there's, if it's a product, you can just sum up all the things that go into it, and that's sort of your cost of goods sold. You know, I have to buy the cabbage, I gotta buy the, you know, the other spices to make my kimchi, and then I gotta buy the packaging that goes in there. And you subtract that from what you sell it for, and you're at your gross profit per unit. And so now you know, for every dollar spent, you're making X dollars or cents. And so that's, once you have your margin analysis, you can really start to do your projections, right? Because now you can say, well, if this one product or service generates this much revenue, I'm going to multiply it by this many times. I'm going to do it over this time period and subtract those expenses out over the same time period and number of events. And then what you would subtract after that is, so those are what's called your variable costs, right? For every unit of product or service, there's a cost that goes along with it. Those are the variable costs, or the, you know, the cost of goods sold typically. And then the other thing that isn't on a per unit basis is maybe you have to lease an office. So if you only sell one unit or provide one service, you still pay that same amount for that lease rent, right? And those are your indirect costs or your fixed costs that are independent of the number of products or services you sell. Those are the key components. And again, it does seem like a lot, but it can be very, very simple. It doesn't have to be super fancy. It can just be very functional. And again, it depends on your audience. If your audience is me, I want the basic thing. I don't need all the frills. I just need the information that's there. When it starts to get fancy is maybe you're doing an equity investment where you're trying to raise equity capital where somebody's buying a portion of your business as opposed to just a debt. And you're really selling yourself and you're selling the business. And that's when you start to see some of these super fancy, slick, glossy business plans. But for securing debt, and certainly for securing debt from Feed the Hunger, function. That's all we want. We just want the basic, and we're happy to help you figure that out. Again, it's probably more beneficial to you as the borrower to understand your business for this than it really is for us to have this information. What it does though is it does tell us, well, historical is absolutely fundamental. We need your pro forma statements for actuals. Looking forward, that's going to tell you the trajectory of your business, but it's also going to help us understand how well you understand your business. If you're able to articulate these points, if you're able to clearly understand why you can expect this growth or why you cannot, that speaks volumes to the person you're talking to about the level of risk they're willing to take with you because you understand all of these things. I probably spent more time there than I intended to, but it is probably more important for the business owner to understand that fundamentally, that regardless of whether or not you're taking out a loan. So please, help yourself, familiarize yourself with that information. Let's see, what do I have next here? Oh, there's the arrow, stop working. The letter of declination. This is, again, I mentioned earlier, we need this, we're sort of a lender of last resort to Feed the Hunger specifically. You can go to a bank in person, that usually takes longer, but maybe you've already done that and that's why you're coming to Feed the Hunger. Some online lenders, you can apply for a business loan through them. What they might say is that we won't give you a business loan, but we'll give you a personal loan. That will work as a letter of declination. You just need to provide, whether it's an email or in this case here, I've included an excerpt from a Central Pacific bank that was kind enough to send out a letter of declination. This step can be burdensome if you haven't done it already. There's some instances where, let's say you're a startup or it's a super risky loan. I do have leeway to draft a note to our federal funders and say, look, they're not going to get a loan from anywhere else. Just look. It's not super reassuring to them, but that is a possibility. My preference is that you get a letter of declination. There are online, I think like Lending Tree or somebody, or often when you're borderline, they'll say, well, we won't give you a business loan, but we'll give you a personal loan, or we'll give you a business loan, but for half the amount that you requested. Those function for us as a letter of declination. So that works as well. I don't know if we have questions there. I know we got this last time. How long does it take? So if I have all of the information and there's no interesting circumstances and everything's all good, it'll take me, maybe 2 to 3 days, depending how much bandwidth I have. What I'm not saying that give it to me on a Monday and expect me to have it all ready on a Tuesday. Please provide me some time. If there are unusual circumstances or additional information is required, it will take more time and it can be difficult to predict yourself 30 days from submission of the loan application to get funds into your account. We currently have loan committee every other week. And so you, at a minimum, please get your stuff in on that Monday, no later than, to make sure that we can try to get it on the agenda for that Friday, preferably the week prior, but just, you know, I mean, we're real people that you can talk to as we go through the process, and we can keep each other informed about where things are at and what needs to happen. But yeah, 2 to 3 days for the underwriting, up to 3 weeks after approval to get the money deposited. We've had very quick turnarounds for the smaller loans. I don't want to promise anything like that, or you know, upset people that are like, you said you could do it in 5 days. Well, I didn't, sorry. Hey, Calamai. Yeah, I don't know. Hopefully that answers that question in terms of the timing. I think, yep, I think this Chihuahua here that's a little skeptical. Were there open to questions about anything?
I have one question. What if I want to buy a business, but I don't know what the value, I'm trying to get the value of that business. And if the owner doesn't have an asking price and asking me to come up with an offer, how do I value the business? Yeah,
they put you in a tricky one, or the art of negotiation, right? Don't be the first one to offer a price. Well, so what the most conservative thing and what would be the lowest thing would be to ask them for a list of assets. Like, what are the physical assets of the company? Let's say they own a bunch of equipment. Years left, you can value those things with the dollar amount. And that would be the
we got Aaron freezing up here.
what you think it's worth is one way. The other methods to do valuation would be, you're going to need their cash flow history. So I don't know how long the company's been in business. You would hope, you know, the longer it's in business, the less risky it is. So you would want to see their tax returns, perhaps at a minimum. Now, I get why folks perhaps underreport income for tax purposes, but it also will hinder them at this point. So if they're going to tell you, oh, well, my taxes don't reflect on them now to do that. So you're going to have to look at what their cash flow has been is one. That's another way. So you can base future projections and whether you're looking at revenue or EBITDA or like net income, those are other ways to do it.
What if I have all the information? What if I have the P&L for like the last 5 years? I don't even know what to do with it. Like, how do I use that information and then come up with the value?
Yeah, well, send me an email. We can nerd out on that. There's different, you know, so you can do discounted cash flow. Depending on the industry, if it's a small private business, you're gonna have a hard time looking at comparables. But let's say there's other businesses, you would look for other deals that have happened, other transactions that have happened for a similar company, and you would look at ratios of what that company sold for versus what their revenue was, or their EBITDA, or their net income. You would look at those sorts of things.
Okay. Yeah, I think I probably need to have a conversation, because I believe we're in an industry that there's not too many of us to really compare to.
Right. Yeah. So that does make it difficult, especially you know, like small private companies or whatever.
And we're a service-based company too, so there's no equipment to put value on or anything like that.
Right. Right. So it's let's assume that maybe there's like some brand name or it does depend on how the client perceives the value as well, right? Like, are they doing business with the person, or are they doing business with the company? Meaning that if the person leaves, they'll go wherever, or is it the company that they want to stay with? That's depending on the type of service, right?
I'm sorry, I don't understand the question.
Well, so that it's not really a question. I suppose it's a statement, but like, let's say that if the customer values the company, right? This company is trusted. I love their service, and I'm just always going to go to get this. Well, let's say it's a hairdresser. You know, I go to this hairdresser. I don't care what hairdresser it is. I go there and I get a good cut regardless of whatever hairdresser. Versus there's 20 hairdressers there, but I just go see one hairdresser. And if she quits, I'm not going back. So the book of business, right, has a different value in that instance where the customer can just walk away. You know, so that's somewhat versus being tied into it. Like, let's say another example might be you use Salesforce, right, for a customer, whatever, CRM. I forget what the R stands for. Anyway, you know, you're using Salesforce and you've got all of these hours tied into it, and you're the sales rep for Salesforce. You sell that business. That company's not going to go away to some other company because they've got all of that time invested in using that service. So all of this is a long-winded way to discuss how to value the book of business, right? It's valuation is an art. There's no science to it. It's you start with these various different ways to create a value, and then you fight over it.
Okay. Thank you.
Yeah.
Okay, we have just a few minutes here. Any other last questions? I guess we can wrap it up.
Okay, one more question. So the business plan, I mean, do you guys help to complete it? Like, if clearly I have a situation that's not common, so do you have that service where I can sit down with someone and like lay everything on the table and you can help me like fill in the blanks?
Yeah, I mean, we can discuss it, and there's various ways that we can go by. Yeah, we should definitely sit down and have a conversation, see where we're at, and see what level of support we can provide. Whether it's us or somebody else, you know, depending on exactly how much time you need. But yeah, we can start and see what needs to be done.
Thank you.
Great, and I wanted to offer out too, we do have a complement of counselors, business, financial, and marketing. So after your conversation, if there's more intensive time needed, more counseling help for any of the pieces, preparatory pieces that have been discussed today, we can certainly help with that as well. Well, thank you, everyone. Thank you, Erin and Shandis. This has been so much valuable information. Again, it's been being recorded, so we'll be offering it on our video business library. So you can refer back if you have one question or another, but we're all human beings here, so you can reach out to us directly. And I will be sending out a survey on this webinar series for your input, as well as links to our programs and contact information. So that should get you started if you have follow-up questions. Thank you for joining us all. Was there any last words from Shandis or Erin? And
you know, thank you for giving us the opportunity, and thank you for the folks that showed up, and I apologize to the folks that will watch it again online.
Thanks, everyone. Have a great week.
Thank you. Bye,
Aloha.
everyone.